Hi, I'm Kevin. I am the host of the Treasure Coast Business Spotlight, brought to you by Fiorella Insurance. And with me here today is John Hockey, who is the director of the REMAX of Stuart Commercial Division. And John's going to be talking to us from the standpoint of, if you're a business owner and you're looking to house your business somewhere, whether it be deciding whether to lease or to purchase, or some of the ramifications that are involved on the commercial side of real estate as opposed to the residential side, which most people have more experience on. So I'm really excited to have John here today to tell us a little bit more about the commercial side of real estate. So John, if I'm a business owner and I'm thinking about putting my business, whether it be an office or a store, what are some things I should think about if I'm deciding whether to lease a property or to purchase a property?
Well, obviously there'd be a big difference between leasing and purchasing. And a lot would be a business decision for yourself as to whether or not you'd want to expense the lease or enter into a capitalization of a purchase. Now, obviously, it's always better to buy if you can, just like owning your house. It's a similar analogy to owning a home versus renting a home. Now, there are a lot of considerations in a lease. I get a lot of calls from people who say, hey, you know, I found that this one's $12 a foot or something like that. But there's all sorts of different types of leases. There's gross leases, net leases, triple net leases. And so a lot of times we get calls from people that have found a property on the internet that might say, hey, this one's 12 bucks a foot. That's a really good deal. Let me show it to you. I said, well, what you didn't see in the fine print is, in this example, they might have up to $9 a CAM. CAM is common area maintenance. So a lot of times people will see things and think they're getting a really, really good deal, but then they find out that there's a lot of hidden costs. So what I tell people is, if they can, it's always better to buy, but there are a lot of considerations involved. One of the things is whether or not you want to do any improvements to the space. An example of someone that would want to enter into a longer lease where they could capitalize improvements would be something that would be a longer term commitment. So a lot of the decision for people would be how long they want to commit to something. A lot of people are really reluctant. People are used to, signing up for 1 or 2, 3 years. But if someone wants to do a $200,000 remodel, the lessor might say, gee, I don't want to sign up for 2 years and spend all this money on a remodel. So a lot of decisions would be to go into the length of the commitment, and then just the finances of the business.
Okay. Yeah, that all makes sense. Now, you were talking about CAM. Would that be similar to like association fees on the residential side?
CAM would be common area maintenance, and every subdivision has different rates. The example that I was using at $9 a foot is for a medical space down in Jupiter that I'm working on.
Okay.
And actually, when you take the CAM and include it, just to give you some prices, in Jupiter, they have commercial spaces between $35 and $40 a square foot, including the CAM, for medical space, which is significantly higher than what we're seeing in Martin County. So obviously, there's also a lot of geographical differences in terms of prices. But that is what CAM stands for. And so a lot of cases in commercial real estate, there are a lot of hidden costs that people don't take in mind. Another example is triple net leases, which we haven't talked about yet.
Okay.
Triple net leases, someone will say, wow, I've got this triple net lease at $12 a foot. I said, do you know what a triple net lease is? They said, no, what's a triple net lease? Well, in a triple net lease, it might be $12 a square foot, but triple net means on top of that, you pay for the insurance, you pay for the taxes, you pay for anything. So the triple net is net, taxes, expenses, and insurance. So then in essence, those sometimes come up to $9, $10 a foot. So a space you might see at $12 a foot in a triple net lease might effectively cost you between $19 and $20 a square foot. So I guess the key is that commercial real estate is fairly complicated in the sense that there's a lot of variables that most people, unless they've been involved in business, wouldn't necessarily understand.
So if I'm understanding this right, a lot of people have experience on the residential side. Maybe they purchased a property or they've leased an apartment or something. So everyone's made some real estate transaction, whether
Right.
purchasing or leasing. So it sounds like there's a lot more complexity to the commercial side of it. So it's probably not a DIY type of thing.
Most definitely.
Yes.
Most definitely. And I can talk for hours of experiences that I've had with people that try to make the inference from their residential experience to commercial. And they make certain assumptions that usually are found to be incorrect, and oftentimes they can be expensive. You know.
That's definitely good to know. Now, if I was to purchase a property, what is different on the purchasing side of a commercial property versus a residential property, which someone might go into thinking, okay, the financing is going to be very similar, or is it similar, or is it different than what they're used to on the residential side?
It's funny you mentioned that. The key difference is in the financing.
Okay.
One difference, I'll talk about some of the other ones, but
Sure.
financing. The biggest thing in commercial real estate is the loan to value ratio.
Okay.
I'm working with 3 people right now who tell me that they have it all figured out. They're going to go in at 80% loan to value. They've got $100,000. They're going to capitalize that. That means that their purchase price should be $280 as an example.
Okay.
And I'll say, well, have you talked to a bank at all? I said, no, I got it all figured out, you know. And being in sales yourself, the last thing that we do is want to tell the person that they're wrong, right? We try to avoid that. So I said, well, so we kind of take it into a third person sort of analogy and say, well, you might want to talk to a lender. Because the fact is, most commercial lending on land is 50% loan to value.
Okay.
And at the highest I've ever seen for commercial is 70% loan to value.
Oh, wow.
So people have to have a lot more skin in the game. I mean, as an example, in FHA loans for residential, you can get as high as 3% down. It doesn't work at all in commercial because the risks for the lender are much more significant. And because it's a business transaction, again, the highest that you usually see for commercial transactions is 70% loan to value. So what it means is that people have to have a lot more skin in the game. There's a lot more money that have to be put in deposits, due diligence expenses. You know, there's a lot of expenses that they say, well, I don't know, what's that for? I'm not used to doing that, you know. A lot of people find out that a commercial appraisal might be $1,500. I'm working on a transaction right now where it's an estate, and I do a lot of estate work, by the way. And in this case, the trustee of the estate required that a commercial appraisal be done. Now, the people that are selling the property, the siblings of the deceased party, say, well, you know, that's $350, $400 for something I've done for residential property. So they say, well, I need to get 3 quotes. So that's fine. I'll get you 3 quotes. And they're all about $1,500. And they said, wow, why are they so expensive? I said, because commercial appraisals are expensive. So there's a lot of
details.
More details and less comparables. One of the things about the principle of substitution is really what we use to do our market studies, is that there's a whole lot more homes being sold in their commercial properties.
Got it. So there's fewer similar transactions to average out.
So let's say, for example, our brokerage sold 243 residential units last month. Okay, they might do 10 commercial. So the ratios are almost 1 to 10, 1 to 20 in terms of units that change, in terms of sales. So a lot of times, commercial appraisals have to use different valuations than just market value. They might have to use replacement cost. They might
with that concept.
Yes, replacement costs. So there's different ways of evaluation, and a lot of times where a lender might accept a simple market appraisal for a home, they might require it to be appraised a number of different ways: market, substitution cost, replacement cost, and those sort of valuations. So it's usually something that's just much more complicated.
So if somebody is like, okay, I need to go ahead and start looking into my options as a commercial real estate professional, is that something you help them with, deciding whether leasing or purchasing is going to be their best thing for their business?
And it's funny, you know, I thought of things we talk about, but one of the things that I am uniquely qualified to do, or do a lot of in Martin County, I guess it separates myself from a lot of people, is that I do a lot of corporate searches.
Okay.
As an example, I did the corporate search for Wawa's land in St. Lucie and Palm Beach counties.
Oh, okay.
Now, the story that I'm telling with all this is that I am out looking for land and properties that aren't listed. See, so the point I'm trying to make is that I do a lot of work for properties that are not listed. Probably 50% of what I do is for properties that aren't on the market.
Okay,
Which is a little bit unique.
Yes.
I consider it kind of my specialty, but it comes from my corporate background. I used to be a project manager in the real estate construction division of IBM.
Oh, wow.
So I used to travel all over the country purchasing land for IBM. So it's analogous to that. The last thing that you ever wanted to know is that you were working for IBM. Because if they knew you were working for IBM, automatically the price would increase.
Right.
So I bring that up as an example of people when they come to me and they look at their requirements. Oftentimes I have requirements that aren't available in the open market, okay, especially in Martin County. Actually, the building behind you, other properties they've been involved with, the other picture that I showed you previously, those are ones that were not on the market. Someone came to me with particular requirements. I went out looking for them. So that's something that I do a lot of. So when someone comes to me and says, well, these are my requirements, I like to think that I think outside the box and that I actually go out and try to find those properties and I'm not limited to simply what's available. That is both on the purchase side and on the lease side.
Okay. So when we think of residential real estate, we think of like you can just go to Zillow or wherever and see what's out there. So it's not quite as simple on the commercial side. So all the more reason somebody should work with a professional like yourself.
Another example is 1031 exchanges. Okay.
Okay.
The fourth quarter of every year, a lot of people call me from the Northeast saying that they've got to spend $2 million in the next 30 days. Well, and they've talked to a lot of people, right? I said, well, I can help you, you know. And they said, well, I've looked at all the stuff in the market. I can't find it. I said, well, a lot of what I do is not on the market. So a lot of people that contact me to do tax-free exchanges, the way the tax-free exchanges work is that they have a certain period of time to identify a property and then a certain period of time to close on that property. So a lot of times I get phone calls from people from New Jersey is the example that's on the top of my head. A guy calls me from New Jersey. The guy said, spend $2 million, you know, in the next 30 days because my time's going to run out. So in those cases, I show up at people's doorsteps with contracts.
Oh, wow.
There's literally a homeowner. It's within walking distance of your office. And I pulled into his driveway once and the woman comes out of the front door and says, well, what are you doing here? And I said, you're probably wondering why a guy pulled up in your driveway with a white Lexus and has a piece of paper in his hands. She says, yes, I am wondering that. I said, well, this is a contract to buy your property in Monroe. And she gives me this blank look. And you probably think that I'm kidding, don't you? I said, but I'm not. So I went up there and showed her the contract and we closed in 30 days.
Oh, wow.
Cash.
Wow.
Okay. So that's an example of thinking outside the box. The Wawa examples, that was 12 individual homes that I had to get under contract and I had to maintain those under contract for 2 years of doing due diligence to get the Wawa approved.
Oh, wow.
So it's a very, very difficult task having 12 separate contracts that I had to update every 6 months and 2 years.
Probably all contingent upon.
Oh, yes.
Yeah.
And it's difficult to write a contract like that.
Yeah.
Because what you do is you write each individual contract and then you have an addendum, which makes this contract contingent upon the 11 other contracts. So you really do earn your keep on those sort of things.
That's interesting. Wow. So it sounds like there's a lot involved with commercial real estate. I really appreciate that you took the time to come out and share. Just, it sounds like just the tip of the iceberg.
Just tip of the iceberg. I can talk about this for hours.
Well, good deal. Well, thank you so much, John. So if you found this video to be helpful, I would love it if you could do us a favor and click the little thumbs up icon, either the like button if you're on Facebook or there's a similar like button on YouTube, depending on which platform you're watching us on. And also, if you're watching this and you have questions and you want to pursue commercial real estate a little bit more, John is a great resource. And in the comments down below or above, you can depending again which platform you're watching this on. We will have John's contact information so you can get a hold of him, and he's more than happy to go through your options and help you out. So thank you so much for watching this video here on the Treasure Coast Business Spotlight, brought to you by Fierrell Insurance. Have a wonderful day.